This is not a drill. What you are about to see is classified information.
We've got many economists, one coming this afternoon from Brookings, who says that there is a recession. Are we in a recession now?
We are in a serious slowdown in the economy, which has very significant consequences for the public, and whether it's called a recession or not is of no consequence.
Sworn to secrecy.
Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. And
Market collapse.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria.
See the truth.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
Good luck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Boys and girls, are you watching Bitcoin right now on the charts? Doing exactly what we talked about the last few videos. I told you the bias is a breakout to the upside. We're going to go over the targets and the charts. I have Ethereum and Solana there as well. The markets themselves are under pressure. The equities, we are long in the tooth in the rallies. NVIDIA did what it was going to do, had blockbuster earnings, carried the market cap weighted indices higher, and now everything's stalling out. Guys, I believe we're looking for our top for this corrective move down. We'll cover all the targets once again in the charts. But understand the environment we are in, because I was watching Bloomberg on Friday, and they had another money manager on from TPW. And he says this is the beginning of a new bull market for AI, and it's going to propel the markets higher for the next several years. You should get in now. This is literally the exact opposite. This is late cycle behavior in the marketplace. Suppress small caps, suppress mid caps, low unemployment, all-time highs in the markets, with 4 of the top 6 economies in the world in recession right now. This is very late cycle. We're looking for this pull down, this corrective move in the S&P. Going to go over those targets, but guys, the higher level target's 4,800, the lower level target, which remains my core target, 4,600. And once we get that target, we're looking for the push back up to a new all-time high, late March into April, make that peak, and then sell off. That will be your FOMO blow off top in the marketplace, and then the massive sell-off. And yes, I believe crypto will follow as well. Some people in the comments are asking, they're saying things like, I agree with your premise. I agree with basically your timeline, but do we have to get this correction? Could we not just hold still here, grind up higher, get to whatever we're going to get to, 52, 5,300, then collapse in March, April? It's a possibility, guys. Remember, what I'm doing is looking at market patterns over the last 4 years, and specifically the Y2K fractal. We went over this in detail, so I don't want to bore you with it. Go back and watch the other videos if you're a new sub. But we went over this in detail, and these patterns had this exact same movements, and we were tracking so close to Y2K. The 1999 in July, major high. October of 99, major low. Then you pushed up for a new all-time high, corrected, and then your blow off top, late March, and then you collapse. And I think that's exactly what we're doing in this marketplace. Guys, another way to determine what part of the cycle you're at, trading. Insider trading in the marketplace. These are people that are trading and in the know, I guess you could say, in the companies. Lee, throw up that Canvas slide. Insider trading right now, it's 4-to-1 selling. As I was turning the computer on to make this video, I heard on Bloomberg, the Walton family, which owns Walmart, or owns a huge portion of the shares of Walmart, they just sold $1.5 billion in shares. Jeff Bezos is now up to $8.5 billion. $8.5 billion in sales right now. Zuckerberg's up to $500 million. Jamie Dimon, the head of JP Morgan, just had his first sale ever after 20 years of being the head of JP Morgan, $150 million. But something else I want to show you. This is so obvious what's happening, the obvious signs in the marketplace for a top and for a potential collapse based on the shitty economic data for the people that have boots on the ground that live in this economy, not the top half of 1% with their private jets and underground bunkers, the lizard people. I'm talking about real people that pay 30% price increases at the grocery store and for daily things that you need to buy. But this is such an obvious event now that social media influencers, Tim Pool, He does basically news. He does basically political news and cultural news. He ran a story on a potential incoming collapse, and he's basing it on this insider trading video that was published as well, and what the elites in the government are doing and what the elites in Wall Street are doing. Lee, go ahead and run that video, guys. We'll talk about it on the other side.
Posted by Quiver Quantitative. And take a look at recent stock trades by Congress that have caught their attention. Now, it's not evidence, or I should say it's not proof, but it is evidence, right? There's a distinction. The fact that there are members of Congress dumping stock and elites and other billionaires are dumping stock does not prove the crash is coming. But it certainly does suggest that people who know things are taking those precautions or acting as though it's going to. I'm going to play you this video, but I want to point out, if you made the same trades as Nancy Pelosi, you'd have made a lot of money in this past year. Let's take a look at this video, if it plays.
Senator Tuberville just dumped a huge amount of his portfolio this month, and I mean huge. To put it into perspective, out of the 61 trades he made over the last month, 59 of them were sales. The other 2 were purchases of put contracts, which if you don't know, is a way to bet against the stock. The reason I'm telling you this is because Tuberville isn't just your regular congressman. When it comes to trading, he has one of the best records in Congress, right next to Nancy Pelosi. And maybe one of the reasons behind this performance is the crazy amount of Senate committees that he's on. There's too many to read, so you can pause and take a screenshot if you want. But it's safe to say, with the amount of privileged info he gets from sitting on all these committees, you definitely want to pay attention to his trades. Now, here's the weird part. Whenever you see a lot of bulk buying or selling by a lawmaker, you typically see some sort of trend. For instance, they could be selling financial stocks or buying energy stocks. But with the Tuberville trades here, I don't see any rhyme or reason to it. He's selling everything from automobile companies like Ferrari, semiconductor stocks like AMD, regional banks like Southern State, and I could go on and on. But here's the catch though. As if Tuberville selling all these stocks isn't a bad enough sign, this week specifically, we've seen some of the richest people in the world selling billions in stocks. In February alone, Jeff Bezos sold 33 million shares of Amazon, which at $170 each comes out to $5.6 billion. Mark Zuckerberg, same story, 900,000 shares of Meta for $416 million. And the list goes on. My point is, when selling like this is going on by the world's richest and most powerful people, it makes you wonder if they know something that we don't. To see any of the data mentioned in this video, I made a website called Quiver Quant where you can track it all for free, and would love for you to check it out when you get the chance. And as always, thanks for watching.
So Nancy Pelosi and Tuberville's selling everything. He's selling everything. I saw as well the ARK fund. It was selling a lot of their semis right now. Guys, understand this is the top of the market or very close to it before this corrective move. And then we'll see what happens from there. But I think you get your blow off top. But I want to update you guys because some of you subs, I read the comments, as you guys know, I reply to everybody that I can. And some of you guys have been following this channel since we started in 2021. And if you've been following this channel a long time, you know that I adapt to the marketplace. You know that when the market and everybody had 250K Bitcoin on their thumbnails, road to the all-time high, plan B had like 400K, 500K, I gave you 10.5. Back when Bitcoin was above 60K. And where did it go in 2022? It went to 15.5. Pretty close. But you need to understand the updates and the targets. The cycle has not changed at all. You are pre-recession right now. And one thing that has happened every single recessionary cycle is the market takes out the low. So I want to give you an update on Jeremy Grantham's predictions for 2024 because a lot of people were calling me Baby Grantham back in 2021. Jeremy Grantham, somebody I've tracked for over 20 years. Keep in mind, this was like pre-social media. I actually had to read his published papers and whatnot, but he nailed the GFC. He's a little bit early on the .com, but he made a pile of money when it broke down. He nailed the GFC. He nailed the bottom to the day of the GFC. And now he's been talking about this bubble, as you guys know, going back to probably late 2020, early 2021. He started shorting the Russell in summer of 2021. I exited the markets, as the long-term viewers know, in November of 2021 when the NASDAQ peaked, Bitcoin peaked, the Russell peaked. And then I retired the following year, knowing what was coming, shorting the markets. And guys, I want to give you an update on Jeremy Grantham. This video is from the Investor Center, and we'll talk about it on the other side.
Billionaire investor Jeremy Grantham is warning that the stock market could collapse a whopping 60% from its current levels. If true, this would be the worst stock market crash since the Great Depression. For almost 50 years, Grantham has made a career and a vast fortune from successfully predicting stock market crashes. And now in 2024, he is calling today's stock market the biggest bubble he has ever seen. You're going to want to stick around till the end of this video because the most worrisome part of what Grantham is saying is that he might actually be right. Here's Grantham to explain what he's seeing in the stock market.
My attitude is, with a bit of luck, we may settle for something like 3,000 on the S&P, all being well, and assuming that my extra factors don't bite too hard. If the extra factors bite pretty hard, which sadly they might, then the market will go closer to 2,000 than 3,000. Let me point out, last time it went to 666, the devil's number. And so even at 2,000, it's made huge progress since 2009, has it not? Or if it went settled for split the difference at 2,500. But I think you better count on 3,000. So I think the market is very likely to be quite a bit lower. The economy is very likely to be quite a bit weaker. Profit margins very likely to be lower, et cetera, and very likely to take longer than you would like. Okay, that's just history. All I do is look at the history and say the best guess is that a bubble will behave like a bubble. And the more remarkable meta-level question is how come people can get away with saying nobody saw it coming? Each time, nobody saw it coming, when the data is screaming that you can't possibly miss it. You first semester course of statistics, you could not miss 1929. You could not miss 1972. You absolutely categorically could not miss 2000 when it went to 35 times earnings. The previous high PE had been 21. It went to 35, for heaven's sake. In Japan, it went to 65. No, you cannot miss these bubbles. And you could not miss the one in 2021. It went to a peak that rivaled 2000. And in some ways it was cheaper, some ways it was more expensive, but it was a very, very obvious bubble. Do not tell me that you can't see these things. And they all break, no exceptions. And if you say that, you'll be called a permabear. But history is quite clear. There are clear bubbles. They have always broken. This one is breaking. What is the average consequence? If you're lucky, 3,000.
So Jeremy Grantham, pretty much echoing a lot of things that you guys know from watching this show. He has most likely plan on 3,000, and he thinks you're most likely going to go to 2,000 or 2,500. But he said plan on 3,000. Again, taking out the low. You guys have to understand that doesn't mean we're going there from here. And as you know, that's not my call. My call is corrective move, blow off top, then the sell-off for the collapse. And again, I just look at what's happening around the world, guys. That's what you guys should do, is wake up, look what's happening around the world. Economies, the four major economies are already in recession. The U.S. will capitulate as well. Being an election year will not save you. I understand a lot of people keep repeating that line, how bullish election years are. We have had 6 election years since 2000. 2000 was also an election year. Out of those 6 election years, 3 of them have been market crashes. This is going back to 2000. Recessions and bubbles are outliers. So if you don't understand that and you look at all the election years for the last 120, 150 years, of course, election years look bullish because the market in general, given over the last 40 years, has behaved bullishly in the longest bull run in stock market history. But 3 of the last 6 election years, going back to 2000, have been crashes. And I anticipate this one playing out the exact same way. I do not think the Fed can save the market. I do not think they'll be able to prop it up. They may be able to stymie some of the damage, but I think at a minimum, you're taking out the low, and I'm betting on that. Lee, let's go ahead and start the show. All right. right, boys and girls, let's kick it off. Guys, as always, SimpleFX and BingX support this transmission. If you want to trade these Ponzi markets, check out our sponsors as it does support the channel. And both of them will pay for your first month in our Discord, guys. Message Lee in Telegram if you have any questions about that at all. That's in the video description. I'll pin it in the YouTube comments as well. And guys, March 1st, we have a big SimpleFX tournament announcement coming starting on March 1st. It's going to be a lot of fun, especially with the volatility here in the marketplace. So you can message us with any questions. I'll give you more details on the Thursday transmission. Let's start off with the E-mini on the S&P, currently at 50.86. Again, our wave patterns, our fractal patterns, guys, 20% waves up, 10% corrections, 20% up, 10% correction, and now we're 24% up. Does this change where I think this is going? Nope. I still believe this is coming down to that 4,600 area level on the S&P right here, 4607. The area that it has to get through, if it is a shallower retracement, is 4841. See this big block of consolidation here? That's where it has to get through, because if not, then you could be coming down from roughly 5,100 down here to 4841, 4850, whatever it is, and then coming back up for that blow off top. And this is a possibility we need to be aware of due to the time frame that we're looking at. Remember, I'm trading the markets based on history, based on patterns in the marketplace. These aren't genius predictions I'm giving you. I'm looking at the history of how the market behaves, specifically in bubbles, and then specifically the last 4 or 5 years, what it does in these patterns. So these are two levels here, the 4841, 4607. These are the two levels we need to watch on the SP to watch the behavior of what happens when the sell-off kicks in. Guys, look for that PCE this Thursday to be a catalyst, 8:30 a.m. Eastern. It's going to most likely come in hot, in my opinion, because the CPI came in hot and the, PPI came in hot. And remember, the Dow dropped almost 800 points when we got that hot reading, wiping out almost 2 weeks of gains. The S&P wiped out almost a week of gains, and that's all this Thursday. Those are the catalysts, and they're both potentially strongly negative for this week. So let's look at this as well on the 5-day chart. On the 5-day chart, guys, I just want to show you something here. 5-day chart, we are peak overbought here, as you can tell with this wave. I mean, this is your previous all-time high. Momentum is starting to wane a little bit. Let's go ahead and zoom in on the daily. Remember last video, guys, what did I tell you last video? The S&P, I said, look for it to get to 5121. Again, Fibonacci, guys, Fibonacci in the marketplace, 5121, and we hit it 5123. So we hit it within $2. You got a little rollover here. You're holding 50.86 as support right now. This could be this type of move, three-wave move. We'll see what happens as this week progresses. Look for that inflation. Again, if it comes in hot, guys, I expect this to start breaking down. Your catalyst for the correction will be in full gear. Let me go ahead and remove this. If this holds as the top, 5121, then the next level is 50.86, 50.59 brings you back to the top of this range here. And then below that, you'd be going lower, obviously. The key fractal that you'd want to break to really trigger a sell-off, we talked about this last time, is 49.36, okay? So you could be bouncing around in this range until this inflation data comes. You could get a little spike up, come back down. Again, remember, time is more important than price. Let's see how this plays out. Let's go ahead and move forward. Let's look at the NQ. This is the E-mini for the at NASDAQ 100. Man, I'm tongue-tied today. So looking at this, we're at 18K right now. We've hit as high as, 18,146. So we're at 18K. This is a 3-hour chart. I was just seeing if we have any patterns present. You have resistance at 18,036, resistance at 18,121, which you did not close above. And again, if we go ahead and zoom this out some, let's look at this on an 8-hour. On the 8-hour, you can see you're printing a larger time frame double top, right? This is a 3-wave pattern. We talk about these patterns, M patterns, W patterns all the time here. So watch this. You got a lot of supply being dumped on these candles. Again, NVIDIA, one stock, responsible for 33% of the gains. And the NASDAQ 100, guys. Getting a lot of supply dumped on you here. This could easily end up just rolling over here towards the end of the week with a hot PCE. Remember, If it comes in lower, then you could see more upside. Something you guys need to understand. I saw some comments in YouTube. There's a couple people that say the same thing every video, guys. That's why I don't reply to you, because you say the same thing every video. You say, oh, you're moving the goalpost. Markets are dynamic, boys and girls. You have to adapt to the market when you have new information coming. That's why we made that video last Monday on NVIDIA. I specifically told you if NVIDIA had blockbuster earnings, expect all the markets to retest the highs. It's exactly what they did. You know who doesn't adapt their numbers, who doesn't adapt to the dynamic marketplace? People that put up things like 250K Bitcoin back when I said 10.5 and Bitcoin fell to 15.5. They just leave it up for year after year, 250K, and it never gets there. Me, I actually trade for a living, so I need to make money off my views in the marketplace. Adapt to new information. If the PCE is low, look for the markets to go up. If the PCE is hot, look for the markets to go down. It is literally that binary. So again, watching this three-wave pattern, watch 18,121 here on the NASDAQ. And when we look at this, again, you could just be printing a double top here on the MFI. Momentum's fine. Everything seems fine. Everything's waiting for a catalyst. If you take out this fractal, you could be going higher, 18,325, 18,584. I don't anticipate that, but once again, I don't know what the PCE number is going to be. If it's substantially lower, you could be on that trajectory to do that. So you have to wait and see, guys, but that's your key levels of resistance. Looking at the Dow, the baby S&P, trading at 39,102. This is the E-mini as well. We got resistance right at 39,277, which is what we wicked beautifully. Again, none of these are big moves yet to the downside, guys. This is just some movement in the marketplace. We have a lot of divergence in the marketplace and all the indices. We went over this last time, so I'm not going to keep going over this. Lots of divergence, but I told you before, divergence doesn't matter until it matters. So we see this. We're putting in some wicks. We're getting supply dumped on us across the indices. Pay attention to that. 39,277. This price went up to 39,343. That range is proving as of now to be strong resistance on the Dow. And again, where do I have the Dow going? We have the S&P going to 4,800, possibly 4,600 would be the preferred measure to keep in line with our previous corrections. Looking at the Dow, I'm looking for 35,850. Right down here, right at your July high. What does that mean for the NASDAQ? I forgot to say it. Let's go ahead and zoom out here so we can look at the NASDAQ. NASDAQ, come on. Get the 3-day chart. Oh, this is an 8-hour. No wonder it's taking so long. Let's get the 3-day chart here. So looking at the 3-day chart, guys, again, we'd be looking for the NASDAQ down in that 16K range right here at this cluster of candles, right at your July high, right in that 16K range. That's if the S&P still pulls to my target of 4,600, which we will know soon. We're going to see movement this week in these marketplaces. So let's go ahead and look at NVIDIA. You're at 795. You hit a peak of 823. So let's find this on our fibs. On our fibs, the 1618 was 797.79. So you're below the 1618 right now. Basically, you're below 800. As long as NVIDIA is holding up in this range, you're going to have pressure on the markets to stay elevated, right? But you can have selling across the board, and NVIDIA can do whatever it's going to do. But right now, NVIDIA just hovering around that 800 mark. But I anticipate selling in that marketplace as well. Looking at the Russell, guys, the number to take out is 2097. You're at 2024. If you can take out 2097, you could potentially have more upside, but the Russell's going to move with the markets. If you get more upside, then look for this move here to 2215. If you were to get more upside, I don't anticipate that at all. I anticipate this not breaking 2100 and rolling over with the markets. And again, my target for the Russell is 618 at 1813 here on the Russell, where it will rebound and then come back up and then possibly take out 2100 and give us an excellent shorting opportunity as well. Let's go ahead and jump to Bitcoin. Look at this. All right. So We talked about this. Remember the last few videos, I told you whenever you have stacking like this in the candles on Bitcoin and don't have massive volatility up and down, it was really constricted. And granted, this isn't a massive move yet, but you broke the fractal here at 53K. So this, I believed, had the bias to go to the upside. Notice my 1618. We were hovered here around 51.8 for this whole accumulation pattern, up and down, of course, but hovering around 51.8. Looking at 55,443 for that next level target, because these fibs have been tracking so beautifully. But guys, we would be remiss to not pay attention to the previous all-time high fib pull down, right? We had an excellent breakout October 23rd from our diamond pattern, 55% gain. And now you're on the next wave move up. And let's look at this from the all-time high and see where that 786 fib is. Let's go ahead and pull this down. And let's look at this. 57,555. So let's zoom in a little bit so you guys can see us a little bit better. So 57,555. My 1618 is at 55,443. That's the box, guys. I want to see it get into this box. 57,555 and 55,443. Current price 53,644. Looking at this, you have room to move up on the daily, on the MFI. Momentum is good. Again, none of that's changed. Bitcoin's moving up. I said Bitcoin would most likely move up when you start to see the markets top. It's just the way they like to play games. So just watch this. This is an easily identifiable target for Bitcoin to find resistance, because you found that resistance at the 618 where we short it for a 21% drop, right? And now your next major level resistance from the all-time high is 57,555 and just beneath it at 55,443. This is, of course, is a BingX chart. Let's go ahead and move forward. Let's look at Solana. We talked about Solana, what it could be doing. It could be making this W pattern, and Solana as well, moving up off that $100 low. Looking if Solana can break 118, guys. This is a fractal that it needs to break right here. 118, if it can break this, then look for 131 to 139 is the range I want to see Solana get up to. If it does not break this fractal, you have a three-wave pattern forming right around that 118, 120 level. Watch that, because your key level of resistance cracking that fractal is 127. So watch for any type of bearish pattern. In other words, if Bitcoin tops out quickly, if it gets to 55,450 or to 57.5 and it does it quickly and Solana doesn't react very well or doesn't really move that much, look at your other alts and Confluence as well. Then look for that range right in here between 120, 130 to see if it's just going to top out in here. But I would look for this breakout above 118, above 127, and look for that breakout to 131 to 140 in that range. And then, of course, we're going to wait and see what patterns may develop. If we look at this on Ethereum, Ethereum hit our target at 3,000 like we talked about, retraced, and now it's moving back up. That next level target, guys, was 3210. I mean, these targets are tracking beautifully, as you can see. Look at the 1618. Just like on Bitcoin, gave you an excellent trade opportunity here at 2620. So we're going to keep this fib because the 2236 is at 3210. And if Bitcoin goes to 57, we may see Ethereum come up to that 3575, the 2618 harmonic expansion. So watch 3210, 3575. Let's go international, looking at the DAX, topping out for right now just below 17,530, just below the 1618. Can we get up there? We shall see. I don't know. We can't tell. It's too early. Do we have anything lower down here? Don't really have anything for the DAX. It's just sitting sideways, stacking three candles side by side. Watch 17,530. If it breaks below 17,400, then that could begin the rollover on the DAX. Let's look at the Nikkei. This is the Japan 225, guys. This is the market that's taken over 30 years to crack its all-time high, and now it's there. The reason I want to track it is because it's such in favor right now. You look on the daily, it's getting close to overbought. If we look at this from a weekly time frame, let's just look at a 5-day chart. 5-day chart has room to move up. I'm watching the key psychological number here, 40K. It's also the 2618. And again, looking at how fibs track, the 1618 provided nice resistance here. The 2618 at 40K. Let's see what this does when the NIC 225 gets up there. Does it just break through it? Does it break through, come back and do a back test, give us an entry opportunity at 40K in confluence with the US markets beginning the correction. Okay. We got to get the tops in. That catalyst is going to be most likely the PCE. If it comes in hot, nail these tops in and start getting a breakdown, further movement, further deterioration in the marketplace. Guys, like and subscribe to this channel if you enjoy this content. I answer your questions as always in the YouTube comments. Hope to see you all in the Discord. Next video update is Thursday. Take care, everybody.